Hello, this is Connie Belden, and in this chapter, we're going to deal with budgets, maybe one of the most important parts of managerial accounting. So be sure to refer to there is a practice Excel budget with videos. Be sure to refer to that as it takes you from the sales budget all the way through doing the cash budget. In this video, we're going to take a look at problem 829, and I'm going to divide it up into two videos. And in the first video, we're going to do the expected cash collections based on the sales budget. We are going to then do our budgeted merchandise purchases, and then we're going to use some additional information and prepare a cash budget. Okay, so let's start with the following data is as of March 31st. You're given the balances for cash, accounts receivable, inventory, building and equipment, which of course are all assets, accounts payable, liability, common stock and retained earnings, stockholders' equity. And then you're given expected sales in dollars for March, April, May, June, and July. Now notice here it says that gross margin is 25% of sales. Remember, gross margin is calculated by sales minus cost of goods sold. So keep in mind for later that cost of goods sold then is the other 75% of sales. Okay, so we're given the expected sales. Now in part one, we're going to complete the schedule of expected cash collections for the second quarter, which would be for April, May, and June. And assume that sales in the current month are 60% collected in cash, and the other 40% is on credit that is collected in the following month. Okay, so let's start with what is collected in the current month. 60% of expected sales are collected in the current month. So for April, I will take 60% times April sales, which are $70,000. Okay, ignore the additional auto fill-in. I'll get rid of that as we go along. For May, it would be 60% of May sales, which are $75,000. That gives me $45,000. And for June, it would be 60% of June sales, which are $100,000. That gives you $60,000. Okay, I do want to go ahead and add it for the quarter, which gives you $147,000. Okay, now remember 40% of the sales are collected in the next month. So for example, in April, I need to go back 1 month. 40% of the previous month, March, is collected in April. So I will take 40% of March's sales, which are $54,000. Try that again. 40% times 54,000 gives me 21,600. May, I go back 1 month, that would be taking 40% of April sales of 70,000. And for June, I will take 40%, go back 1 month of May sales. Okay, and then I'll add it for the quarter. So this tells me how much incoming cash I expect to have each month. So if I had 42,000 plus 21,600, I expect cash of 63,600 to come in during April. Okay, do the same for May, June, and it doesn't matter if I go vertically or horizontally for the quarter. Fix that there. For the quarter, I expect to collect 226,600 in cash. Now what I'm going to do, I'm going to go ahead and skip for a moment to part 3. Okay, because right here is my expected cash collections for April, May, and June. So 63,600, 73,000, and 90,000. I'm going to bring it down to part 3 to my cash budget as expected cash collections. So I'm going to come down here to my cash budget where it says add cash collections from customers, and I'm going to fill in my answers from part 1. So I will go ahead and type those in. For a total of 226,600. Okay, and then I'll come back to part 3 in a moment. Okay, let's go back to part 2. We're going to compute the merchandise purchases budget and schedule of expected cash payments when we're going to pay for those purchases. Assume one half of the inventory is paid for in the month we purchase, and the other half is paid for in the following month. We desire an ending inventory of 80% of next month's cost of goods sold. Okay, so again, since gross profit was given at 25%, that means my cost of goods sold is 75% of sales. Okay, so for April, I will take 75% of April's sales, which is 75% of 70,000. And that will give me 52,500. Okay. For May, I will take 75% of May sales, so 75% times 75,000 will give me 56,250. And for June, I will take 75% of June sales, which are 100,000. So that would be 75,000. Okay, and then I'll go ahead and add the 3 months for the quarter. 183,750. Now I'm going to need July's for a calculation. So I'm going to go ahead and also take 75% of July sales. So 75% of 51,000 for 38,250, or see why we need that in a moment. Now it says add a desired ending inventory. We want to make sure we don't run out of 80% of next month's cost of goods sold. So for April, I'll take 80% of May's cost of goods sold of 56,250. That gives me 45,000. For May, I will take 80% of June's 75,000. And for June, I will take 80%. And that is why I went ahead and did July. Don't do this row here because that's a quarter. So I will go out to July's. Try that again, 80% times July's 38,250, and that gives me 30,600. Now I'm going to wait and come back to the quarter column later. Okay, and we're going to add the 2 rows together to get the total needs. And again, I'll come back to the quarter column in a moment. Now, I already have some inventory, so that means I don't need to purchase it. So notice it says less beginning inventory. And the inventory on March 31st would be carried over to April 1st. So when I go back to my initial information, inventory on March 31st is 42,000. Inventory, merchandise inventory, same thing. So that will be my balance on April 1st. So I'll fill in 42,000. Now for May, April's ending balance is 45,000. So that would be the balance on April 30th. So I will carry that 45,000 as my beginning balance on May 1st. On May 31st, my ending balance is 60,000. So I will carry that down as my beginning balance on June 1st. Now, because I already have those, I subtract the last 2 rows. So 97,500 minus 42,000, and do the same across the board. Okay, so that gives me my required purchases. Now, as far as cash payments for it, remember it said that one half is paid for in the current month, the other half is paid for in the next month. Okay, so in April, April purchases were 55,500. Okay, we'll come back to, well, let's go ahead and do that. Let's go ahead and do March's purchases. So on March 31st, that would be our accounts payable balance on March 31st, the purchases that we still owe for. So I'll go back up here accounts payable on March 31st is $25,050. So we'll assume that that will be paid for in April. Okay, for April purchases, those were $55,500. So 50% or one half, which would be $27,750, will be paid for in the current month of April, and the other half, $27,750, will be paid for in May. Next, go to May's purchases. May's purchases are $71,250. Half of that is $35,625 will be paid in May. The other half, $35,625, will be paid in June. Okay, June's purchases are $45,600. Half of that is $22,800, which will be paid in June. The rest of it will be paid in July, so that goes into the third quarter. Okay, now I just have to, in my quarter column, add the rows. Okay, and add the columns. I guess I said that reverse, but add all the rows and columns. And if you go vertically or horizontally, you should get the same amount of $174,600. Now let's go back and finish the quarter column up here. Keywords, if it says ending or if it says in beginning, instead of adding the row, you take the number from the beginning or the ending of the quarter in this case. So here it says add ending. So the end of the quarter would be June 30th. So the end of the quarter is $30,600. So I don't add the row, I just bring over the amount from the end of the quarter. Then I go ahead and add so far the last two numbers, $214,350. Okay, here it says the beginning of the quarter. Again, don't add the row. The beginning of the quarter would be April 1st, which that is $42,000. So I'll bring over the $42,000, and then I will subtract the last two numbers. Okay, giving me $172,350. Okay, next I'm going to move on to the cash budget. So what I'm going to do first is these were my disbursements for merchandise, the numbers I've highlighted here. So I'm going to bring those down to the cash budget, and I'm going to bring those to this row right here where it says our cash disbursements for inventory. Okay, so I will bring down the $52,800. I will bring down the $63,375. Bring down the $58,425. And I can just add the row again. Okay, now obviously there's some additional information that we need to finish out this cash budget. Besides inventory, let's assume other expenses include commissions, that's paid in cash, 12% of sales. Rent of a fixed $2,700 a month, paid in cash. And other cash expenses, 6% of sales. Now notice it also says depreciation of $990 a month. This will actually not be included, so we'll just ignore it, as part of the cash budget, because depreciation is not a cash expense. It's a sunk cost. You do not pay out cash, for example, when your car goes down or depreciates in value. So basically that depreciation is ignored. Okay, so I'm going to calculate out the commissions, rent, and other expenses, and then put them into our cash budget. Okay, so let's start with commissions. Commissions are 12% of sales. So for April, it would be 12%. And then I'll go back to April sales, way back at the beginning, 70,000. Okay, for May, it would be 12% again of sales. And May sales, go clear back here, are 75,000. Okay, and for June, it would be 12% of June sales. And June sales were, if I go back, 100,000. Okay, rent, $2,700 a month. So just fill that down the column there. Okay, and then I'll do the same thing I did for commissions, but take 6% of sales for other cash expenses. So 6% of April sales of 70,000. 6% of May sales, which are 75,000. And 6% of June sales, which are 100,000. Okay, next what I will do is I will add the total cash disbursements for April. Then I will add the total cash disbursements for May and for June. Now I can also do it for each category by adding the column. So I'll add the 3 for commission, add the 3 for rent, other expenses, and then I should be able to go vertically or horizontally and get the same amount for the total. Now let's take a look at our other important information. Management wants a minimum balance at the end of each month of $4,000 cash. If not, they will borrow in increments of $1,000 at the beginning of the month and repay with interest at the end of the quarter. The interest rate is 1% per month. Also, we bought some equipment costing $1,900 that will be purchased in cash in April. Okay, so let's finish it out by starting with the April column. So the beginning cash balance is given to you back at the beginning of the problem. It says the cash balance is $7,900 on March 31st. So we're assumed that is carried over to April 1st. So I filled in the $7,900. I already filled in my cash collections from part 1. So if I add that together, my cash available is $71,500. Okay. Now I will have to just continue on with the April column. I can't do any more in the May column yet. So next what I will take a look at is the expenses. That would be for the ones that I calculated above. So for example, for April, and we're just combining them all together, for commission, rent, and other cash, it was at $15,000. So I'll bring that down. For May, it was $16,200. And for June, it was $20,700. Okay, and then I can add the row. Now for equipment, it did say just in April, we would buy $1,900 worth of equipment. Okay, therefore I'll bring 1,900 over to the total column. Okay, so now I want to add the last 3 rows for my total cash disbursements. So let's start with April. 70,000. Now I just have 2 for May and 2 numbers to add for June. Okay, I can go vertically or horizontally, and I get $228,700 for the quarter. Now I have purposely highlighted in yellow because the next step will be to take my cash that I have available in April, that's $71,500, and subtract my cash disbursements, which is $70,000. So I will take the difference, and I have $1,500 excess cash. Now remember, it said you wanted at least a minimum balance of $4,000. To get to $4,000, we would need $3,500. $4,000 minus the $1,500 we have is $3,500. But it says we borrow in increments of 1,000, sorry. So that means we would have to round it up to 4,000. Okay, so therefore our cash available at the end. Oh, I'm sorry, I'll take that back. We just have to borrow 3,000. Okay, therefore the cash at the end would be 4,500. Okay, because 4,000 minus 1,500 is actually 2,500. My apologies on my math errors. So we just need to borrow 3,000. Now we can't just borrow 2,500 because it says we have to borrow in increments of 1,000. Okay, so that gets us at 4,500 ending balance for April. Now that we have the ending balance on April 30th of 4,500, we can bring that up to our beginning balance on May 1st. Add that to the incoming cash. Okay, now again, I will subtract the numbers in yellow. I have 77,500 expected cash inflows minus 79,575. And notice that I am short $2,075. Now, remember that I need at least a $4,000 minimum balance. So I need 4,000 plus I'm short another 2,075. Now, again, I got to round that up to the nearest 1,000 because I have to borrow in 1,000 increments. So therefore, if I round that up, that means I'm really 3,000 short. So plus I need a $4,000 minimum balance. So therefore, I need to borrow $7,000. Okay, and when I add those together, that gives me an ending balance of $49.25. So that May 31st ending balance of $49.25 is carried over to June. Add the two numbers together. Okay, and then take the cash inflows and subtract the cash outflows. We now have an excess of $15,800. So we now have enough to repay. We borrowed $3,000 and $7,000, so we borrowed $10,000. That would reduce our cash flows when we repay it. We now have enough to repay that $10,000 plus interest on that $10,000, and that would be for 1% per month for 3 months. But we do have to break it down. The $3,000 was actually borrowed for 3 months, so at 1% a month, that's 3%. The $7,000 was actually borrowed for May and June, so therefore that's 2 months at 1% a month. That would be 2% of the $7,000. So 3% of $3,000, 2% of $7,000 added together, and the interest that you're going to pay is $230. Okay, so if I take the $15,800, subtract out the $10,000 repayment, subtract out the $230 I have to pay in interest, that gives me a balance at the end of June of $55.70. Okay, now let's go ahead and finish out the quarter column. Like with the purchases budget, if it has beginning or ending, you don't want to add the row. You want the beginning or ending balance. So here it says beginning. The beginning of the quarter is $7,900. I already added that row. So now I will add $7,900 plus $226,600 to get $234,500. Okay, I've already added my disbursements, so I'll subtract my cash inflow from my cash outflow, $5,800. I will bring over that I borrowed $10,000. I will bring over that I repaid $10,000, so that pretty much cancels it out. But then I spent another $230 in interest. So $5,800 minus $230, because the $10,000 cancels each other out, also matches the end of June balance at $5,570. In the next video, we'll continue on with the budgeted income statement.